Many of us have many times delayed in paying taxes. Sometimes this delay is of days and sometimes of months. But does Income Tax Department do anything about it? Of course, there are consequences of late filing of income tax, and in today's video we will learn about the kind of consequences you might face. Welcome to the Enterslice YouTube channel. I am Sobia Amin, your tax assistant for all your tax problems. Income tax is liable to be paid on or before the time prescribed by the Income Tax Department, and when the due date is missed, a taxpayer suffers a penalty. Therefore, it is vital to know the types of interest you may have to pay in the circumstances of late payment of taxes. Let's learn together. When a taxpayer delays in paying the taxes on time, he or she is penalized under Section 234A, 234B and 234C of the Indian Income Tax Act. As a penalty, the taxpayer has to pay interest under these sections. Among all these, today we will primarily discuss in detail about the interest imposed under Section 234A specifically. So what Section 234A actually speaks about? An income tax return shall be filed within the due date specified for the same. However, failure to pay taxes by filing an ITR in time leads to a penalty in the form of interest as per Section 234A. In that manner, the rate of missing upon the filing of ITR within the prescribed time limit eventually falls, leading to orderly compliance. If an individual or you specifically do not miss the filing of ITR within the due date, then you must fall in one of the three categories. First, certain outstanding taxes are there that are left to be paid to the Income Tax Department. Second, one is eligible for receival of income tax refund from the Income Tax Department. Third, one has paid the income tax on time without expecting any tax returns or payable taxes. As per category 2 and 3, if you fall in any of these two, then you are free from worries about late filing of income tax return, as interest will not be imposed under these two situations. However, there may be some charges imposed if the assessing officer finds it necessary. Nevertheless, if there are certain outstanding taxes left on you to be paid, then you may face certain trouble. According to Section 234A, the charged amount as interest in such scenarios is at the rate of 1%, or part of a month as simple interest is calculated on the outstanding amount. Moreover, the interest is levied from the respective due date for filing the income tax return of the respective financial year till the date the income tax return or the outstanding amount is actually paid. Filing of income tax returns within or on the due date is recommended to the taxpayers, as missing the deadlines either by choice or by chance will lead you to penalizations in the form of interest being imposed on you. These rates will lead to a higher amount of interest to be paid if the days delayed are higher. Therefore, as early the filing, lower the interest. As a result, we recommend you to make sure you plan your ITR filing in such a manner that it is filed within the due date to put you on a safer side, avoiding interest being imposed on you. If there is any interest imposed on you and you want a solution, or you need other sort of tax assistance, then you may contact us on the number mentioned on the screen. Our team of experts will connect with you at your convenience to resolve all your tax queries. Also, just like Section 234A, there are two other sections, 234B and 234C, which also talks about interest. But we will keep these two for our later discussion. So stay tuned not to miss any updates. See you next time.